Okay, so here we have the 7-1 work together. As you can see, there's 5 steps in this one. We're going to be preparing an income statement and then calculating the column amounts from the income statement. Then step 4, seeing what the net income or loss is. And then in step 5, the percentage of expenses to income. So first off, by preparing an income statement sheet, of course, the best thing is if hopefully you've already done the study guides. If you have, this is going to make a lot more sense to you if you've done that first, because you've gone through the book and seen some of the examples while completing the study guide. If not, you can open the ebook and look at the pages. The pages don't quite match up exactly as what they show on the worksheet, but they're fairly close. But you can, click back through the pages until you find the example that matches. Obviously, it's going to be in section 1. So to first off, to start preparing the income statement, we've got to start with the header, the top of the sheet that's going to show who the income statement's for, what type of document this is, and the date. So in our instructions, it says hair care salon has completed its worksheet. That's going to be our worksheet that we did in chapter 6. Has completed its worksheet. It's now ready to prepare the income statement. So it's going to show the income, the expenses, and we're going to subtract the expenses from the income to see if there's a profit or a loss, and then calculate the percentages. And if you remember from chapter 6, we ended up with a net income. So it's now ready to prepare the income statement. The first step in preparing an income statement is the heading. Fill in the blanks of each row of the statement for hair care salon for May 31st of the current year. Enter the year as 20-. Okay, so top one is going to be for the name of the business. Hair care salon. And this form that we're filling out is the income statement. And the date, this is going to be for the month of May. So put May. For month. Ended May 31, 20-. So that's going to be at the very, very top of this form. So then we'll click next to the income statement items. So in this step, what we're going to do is we're going to identify which of these items is going to go onto our net income statement. So the list of accounts shown here is taken from the worksheet. For each account that appears on the income statement, indicate the section in which it should appear. For any account that does not appear on the income statement, select neither. Once again, this is something that you can open the ebook or the paper, the hardcover physical book to look at for the example of an income statement. So cash is not going to be on the income statement. It's not a revenue or an expense. Remember, we're just looking for sales and expenses, nothing else. So cash goes on neither. Petty cash is going to go on neither. Supplies not going to go on neither. It's neither a rent or an expense, or revenue or an expense. So the accounts payable, capital account, drawing account, income summary. So none of these accounts are going to go on the income statement. Like I said, we're only looking for sales and expenses. So sales, that's going to go on the income statement. Sales is revenue. Any money that comes into the company, comes into the business is revenue. Mark revenue. Then the other column is expenses. So these are pretty easy to pick out because they all have expense, except for the cash short and over. Everything else has expense as part of the title. So that's going to be an expense. The cash short and over, remember that's for petty cash. So if the petty cash is short, to replenish that, that's going to be an expense. And then anything that was purchased using petty cash is an expense. So when we did petty cash back in chapter 4, I believe it was, bought postage, miscellaneous expenses. Those are expenses. So expense, obviously insurance expense, miscellaneous expense, supplies expense, utilities expense. So the only items that are going to go onto the income statement form are these items: sales and expenses. Go to the next step. Okay, so now we've got our worksheet. So we have all those same accounts at the top, in the top half, that do not go on the income statement. So we're only looking at here on line 8 where it says income summary. Everything below the income summary is what's going to go on the income statement. And that's going to be easy to identify because we actually have a section on the worksheet at the top that says income statement. So you notice we have trial balance, adjustments, income statement, and balance sheet. So we're going to use these items that are listed in the income statement columns. And we're going to put those, we're going to match these up with the columns on the income statement. So we'll start with sales, $5,800. So that's all the money that came into the business from sales of merchandise and services. So then we're going to have all the expenses listed over here on the left side. So advertising expense was $750. Cash short, $3. So $750. 3. I guess it's to insurance and miscellaneous. So insurance is $610. Miscellaneous $167. So $610. $167. Then supplies $540 and utilities expense $300. So they're all the expenses. So that gets us to our final box here where it says total expenses. So basically we're going to add up all the expenses. So 750 plus 3 plus 610 plus 167 plus 540 plus 300. Our total amount of expenses, $2,370. So we're only partially completed yet, though. We're not totally complete. Obviously, we have two more steps to go. But right now we've got sales, $5,800, and our total expenses, $2,370. So let's hit the next step. Okay, now we're going to calculate the net income or a loss. So hopefully you can kind of figure this out without using a calculator. In general, we have more sales than we do expenses. So there's going to be money left over. So that's going to be a net income, not a loss. Then to calculate the income, we just subtract. So we have $5,800 in sales minus the expenses. So the net income is $3,430. So that was the profit for the business for the month. Okay, so now we're going to go to the next step. Okay, a lot of businesses will have a certain percentage that they're trying to hit as their monthly and annual goal for profit. That's called usually that's another term for that's called the markup, the percentage that they need to make. So to figure out what our percentage of expenses to sales is, we're going to have our expenses $2,370 divided by 5,800. So the total percentage of sales that went to expenses is going to be 40.9%. So don't forget the rounding rule. We've got a 6 on the end here, so we're going to round that 8 up to a 9. So 40.9%. So let's say the business owner had a goal of expenses to sales. Their goal is 40%, and they can see that they're at 40.9. So they would look at these different expenses here to see where they can try to cut expenses a little bit to get that percentage down. So then the next step is we can calculate the amount of sales that went to profit. So a couple ways to do this. 40.9% went to expenses. So obviously there's going to be the other parts that's left over, so we can subtract 40.9. And that gives us a 59.1% of profit or net income was from sales. Or we could have just taken our total amount of sales, and I need to fill in this 100. So obviously all of sales is going to be 100%. Or you could have done this 3430, just like we've calculated the expenses. Take 3430, divide that by 5,800. We get 59.1. So same amount either way. So there is the 7-1 work together.